welcome to Markets. Today I'm Lata Venkatesh, with me is Surabhi Upadhyay. It was a bad day for the bulls in the market. It didn't start that way. The Asian markets had showed a little bit of a mixed picture. Shanghai was not in a bad place, and overnight the Dow had given us a 125-point rally. It looked like the Indian markets could build on yesterday's recovery and perhaps conquer the 8,000 mark as far as the Nifty is concerned. It started that way and held on in the green till half the day. But thereafter, with bad news coming from Europe to some extent, the markets first fell and then tumbled. The indices have lost 2%, the Sensex and the Nifty and the mid-caps as well, 1.4%. It was a bad day across sectors. Commodities were the worst sufferers, but not the only ones. Banks, autos, every one of them did badly. Hi, Surabhi.
Hi, Lata. I guess we go back to that very cliched line. Volatility is the only constant in this market, which is what today's day proved. Let's get you the headlines. A rocky day on Dalal Street, with the market coming under a sudden bear attack in late trade. Benchmark indices collapsed 2%, ending at the day's low. The Nifty falling to around 7820. The Sensex down almost 500 points. Metal, infrastructure and banking stocks take the worst hit, with the Bank Nifty falling 3%.
Concerns over Chinese growth trigger a slide in industrial metal prices. Commodity stocks feel the heat back home. Vedanta and Hindalco crack 6 to 7% each. Coal India ends over 5% lower. Oil and gas majors RIL, ONGC and Cain also end weak on lower crude prices.
The mid-cap index falls over 1%, relatively better off than blue chips. Motherson Sumi slides another 7% on concerns over the Volkswagen emission scandal fallout. Amtech Auto cracks 12% as that company defaults on a bond repayment. Realty stocks like HDIL, Unitech and India Bulls Real Estate end 4 to 6% lower.
Those were some of the headlines from the street. Here are the experts that we have lined up on the show for you. Gautam Trivedi of Religare Capital Markets joins in with his take on the markets. And on Corporate Radar, we will be listening in to Vineet Nair, the Executive Vice Chairman of Tech Mahindra, on the company's payment banking plans. We will also get you some global opinion from Michael Kurtz of Nomura and Sakti Siva of Credit Suisse.
But first up, let's tell you what exactly happened. A dramatic late onslaught from the bears sparked a major sell-off on Dalal Street. Jittery global markets, and add to that the fact that it's expiry week, all that proved to be a heady cocktail for the bulls, who had really no place to hide. We've got Anuj Singhal now joining in with the day's action. Anuj, bears in absolute control once again?
Ugly day for market. Till 1 p.m. it looked like a normal Tuesday of an expiry week. The market was flat. Individual stocks were doing well. Cash volumes were low. It looked like, the normal day at office. And then at 1 p.m. we did see a big slide in European markets post 1 p.m. And then between 1 to 2:30 p.m. the market had a brutal fall. The Nifty not only gave up 7,900, 7,850, but even 7,800 on closing. Yes, it managed to pull back above 7,800 on an adjustment basis, but the last trading price was at around 77.80. So that was telling you the kind of problem that the market had in today's trade. And it was led by big stocks today. Stocks like HDFC, Larsen & Toubro, ICICI Bank, Reliance, Tata Motors, Coal India. All these heavyweights, banking stocks, stocks like Axis, Yes, Kotak, PNB, all of them were selling off in trade today. Not just that, metal stocks like Hindalco, Vedanta, Tata Steel, or even some of the other relatively stronger stocks like NTPC, Power Grid, Ultratech, they were all selling off. And in the mid-cap space, of course, we had names like an Amtech Auto, or even a name like Unitech, or Motherson Sumi for that matter, that were falling. So it's now smacking off a bit of an ugly expiry. Tomorrow morning is crucial because the Dow futures are indicating a big downtick. It will be interesting to see what happens on closing basis in US markets, because our markets are now held hostage to what's happening globally. And today looked ugly, but the bigger question is, can it get uglier even from here on?
Well, thanks for that, Anuj. Just want to add my 2 bit on the way European markets slid. The fall in the Indian market started a little after 1, and it coincided with the European markets starting very badly. The fall was led by Volkswagen. That stock fell almost 20% after its US unit admitted that it had fudged some emission tests. And then there came noises from France, a French minister demanding that all European automakers also be probed. So that brought a lot of the European car makers down. And then separately you had yesterday's tweet from Hillary Clinton about pharmaceutical majors charging too much for some drug prices. So pharmaceutical shares were the next in the line of fall, and there were big falls in the commodity space as well, with growth fears in China and in Asia kind of simmering. You saw the copper prices on LME take a beating, and with that the entire lot of mining majors like Glencore and the whole host of them also taking a knock. Credit Suisse was particularly instrumental in downgrading some of this. Net in the first 2 hours of trade itself, the European shares had lost between 2 and 3% at an index level. That may not be all. We may be still in store of jittery news tomorrow. The September PMI, flash PMI, Purchasing Managers Index number from China will be released. We must remember that last month it was this number that had thrown global markets into disarray. A Reuters poll indicates that the September PMI might come at 47.5, better than the 47.1 in the previous month. But if it disappoints, then it's going to be again all hell breaking loose. Even at these levels, 47.5, it would be a seventh straight month of fall. What is even worse is that if it came at that 47.1 levels, it would be, according to the Caxin numbers, the private forecaster, the numbers were last month as bad as 2009. And the official numbers indicated that the PMI numbers are as bad as 2012. So if the September numbers are anything like the August numbers, we could be in for more reverses.
Absolutely, and that is indeed then the data point to watch out for tomorrow. But for what it's worth, in today's action, Asian shares did manage to end on a positive note. The Shanghai Composite closed 1% higher. The Hang Seng in Hong Kong was marginally higher as well. And the South Korean Kospi went home with gains of nearly 0.8%. Here's Michael Kurtz of Nomura and how he's reading the global picture.
It's tough to say that stocks anywhere in the world are particularly overvalued right now. Asia overall is in discount to long-term averages, and if you look at price-to-book multiples, Asia actually got frighteningly close to its 2008 trough just a couple of weeks ago. The U.S., of course, equities do look a little rich relative to long-term averages, and those people who like to look at the Shiller PE multiple, if you like that particular metric, are quite a bit more concerned about valuations. But no, we don't think that's what this is about. We think this is very much about the global growth outlook. And with all due respect to those who think that the U.S. is the center of everything, actually we think that much of the global market turmoil over the past couple of weeks has been very much centered on concerns about China.
Their concerns about China, they never seem to ebb. Well, the markets will continue to trade in a range. That's the word we got from our market guest, Gautam Trivedi, Managing Director and CEO of Religare Capital Markets. He also spoke to us about his sectoral favorites.
I am looking at range trading. I think the market, unfortunately, is going to be a little bit range bound between now and I guess even until December, when the Fed finally decides what to do with whether they're going to hike rates or not. But I think sector-wise, we're still positive. IT, and given though of course IT hasn't reacted as much as it usually does when the currency depreciates. So we like IT. We like the passenger car business. We like the CV space. The market's being propped up for a change by the domestic mutual fund industry and not so much by the FIs. So I guess, if the current situation continues and the FIs remain net sellers, that is honestly a cause for concern. So I think the market between now and the, RBI rate hike could be pretty volatile. The foreign institutional investors right now are not really inclined to put incrementally more money into India.
All right, now let's go back to that big global story that's having huge ramifications even here on Dalal Street. Volkswagen shares continue to slide today. This after the boss of Volkswagen's US business, Michael Horn, admitted that the firm was dishonest in using software to rig emission tests. Horn said, and I quote, "We have totally screwed up." Volkswagen has announced that it will set aside 6.5 billion euros to cover the costs of the investigation. The move will leave a significant dent in its earnings this quarter for sure. Volkswagen warned that the 6.5 billion euro amount could be revised higher as the investigation continues.
We will continue not only to correct this TDI issue and to straighten things out and to pay what we have to pay, but we will continue to work very hard to make our story here in the US for the customers, our dealers and employees a success story. I'm confident and I'm personally committed that this company will do what it needs to be done to make things right.
All right. Well, Motherson Sumi, which is one of the component suppliers to this German auto giant, has also been feeling the heat. This despite the Motherson management trying to emphasize that Volkswagen's decision to discontinue the sale of all diesel vehicles in the US will have a very small impact on Motherson's revenues. Sonia Chenoy is here to analyze the impact on both Motherson and the Indian auto industry. Sonia.
Oh, despite the management's denial, Motherson Sumi will definitely get impacted by the Volkswagen scandal. Now, as you've been mentioning, Volkswagen has been accused of cheating on the diesel emission tests in the US. The sales to the Volkswagen Group contributes about 44% of Motherson's revenues in FY15. So Volkswagen is Motherson's biggest client at this point in time. Now, Volkswagen has come out and said that the discrepancies are related to 11 million vehicles worldwide. So the issue is not only to do with vehicles in the US, but vehicles worldwide. And Volkswagen has set aside €6.5 billion to pay for the emission crisis. Now, what is the impact on Motherson? CLSA says if Motherson's revenues from Volkswagen declines by 10%, then that will result in a 6% downside to the FY17 EPS.
People don't understand the implication of the whole thing. They've stopped selling, or Mr. Witterkorn has said that they will stop selling, I think, the diesel version. But they will also sell the petrol version. They will sell all the other things. There is no impact as such. We are not supplying in the US. We are supplying in Europe. Now, what is going from Europe to America, we don't know. And basically, I don't think much is going anywhere. So this is the thing about public knowledge. I think, probably the best way to explain this is that people are just overreacting.
All right, that's the chairman of the Motherson Group putting up a brave front, at least for now, saying not too much of impact just yet. But Sonia, before we let you go, let's also talk about Amtech Auto. That stock down over 11%. It seems the company is defaulted on an 800 crore rupee bond repayment.
Oh yes, as you rightly pointed out, Amtech Auto fell substantially as the company defaulted on an 800 crore bond repayment. Now, remember the 800 crore worth of bonds that were issued in 2010 matured on Sunday, but there was no payment made up until end of day yesterday, and neither was any payment made today. There is currently no consensus amongst the lending consortium on the issue of any additional loans that will be granted to the company. So the Joint Lender Forum is still deciding on a corrective action plan for Amtech's 6,500 crore loan. Now remember, it's not just Amtech Auto that has been under pressure, but all of the banks that have an exposure to Amtech Auto that are under pressure as well. So IDBI Bank tops that list with almost a 2,000 crore exposure to Amtech Auto, followed by Andhra Bank, which is at about 700 crores, and SBI, which is at about 650 odd crores. Amtech Auto itself is in a big soup. The net debt of the company is at 16,500 crores. And as of now, there's no way the company has raised any money. In fact, the management said in several interviews that they're looking to raise $1 billion by divesting some stake in subsidiaries, but none of that money has come through just yet. So going from bad to worse for the Amtech Group.
Okay. One auto ancillary company after another in different kinds of trouble, of course. Thank you for that, Sonia. But Motherson Sumi and Amtech Auto were not the only laggards in trade. Today, a number of stocks hovered near the 200-day moving average. Varninder Bansal is here with that list.
Well, thank you so much. The market clearly ended very weak today. There are a few stocks to keep an eye when the markets open tomorrow. Look at Sun Pharma. That stock ended 1% below 200 DMA mark of 909. Keep an eye on that stock. Among the broader markets, keep an eye on Sun TV. That stock is trading at 200 DMA, which is 362. Arvind could also be important because that stock was weak today. That is only 2% above the 200 DMA mark for the stock. So keep an eye on that as well. Few other stocks in the large cap like Asian Paints, which is again trading at 200 DMA. The 200 DMA for Asian Paints is 806. The stock ended at 805. So keep an eye. HDFC Bank would be very important. That stock ended 1% below its 200 DMA of 1043, and that is an important stock during the expiry week. And also Bajaj Auto could be important because that stock is trading now nearly 2% below 200 DMA mark, and the entire weakness came today in the market. The 200 DMA for Bajaj Auto is 2308. So in the broader markets, keep an eye on Arvind and Sun TV, and the large caps, keep an eye on Asian Paints, HDFC Bank, Bajaj Auto.
Thanks a lot for that most useful list, Barinder. Yes, traders will have to watch the screen with 4 pairs of eyes tomorrow, especially if you have positions and as we head into the penultimate day of what has been a very difficult contract for the markets. We'll take a break on that note, but coming up, we will tell you about other stocks that were in the news. We will also get you managements of some stocks that have been leading lights in the market.